Imagine a nation that, well, in just a few short years, didn't just catch up, but actually leapfrogged global digital payment leaders. Think China, South Korea, even the UK, in real-time transaction volume.
That's quite a story.
It really is. That's the extraordinary story of India. Today, we're taking a deep dive into India's payments industry. It's a true marvel of digital transformation, really redefining what a financial infrastructure can even be. Our mission for you, the listener, is to rapidly unpack how India constructed this digital financial system, not just as, a technology, but as a genuine public good. We'll uncover what makes it so uniquely successful, and crucially, what challenges and, frankly, vast opportunities lie on its horizon.
Right.
This isn't just a story about code and apps, is it? It's more like a masterclass in how visionary policy, relentless innovation, and the sheer will of millions of people can converge to create something truly unprecedented.
Absolutely. And it offers profound lessons for economies worldwide.
Okay, let's unpack this then. When we think of India, many might still picture a, cash-heavy economy. So how did a nation like that embark on this incredible digital journey? It certainly feels like a recent phenomenon, but I'm guessing the groundwork must have been laid much, much earlier.
You've hit on the core point there. It wasn't an overnight sprint. It was deliberate, a strategic long game, really. The foundational role of public sector institutions was absolutely crucial.
How so?
Well, India's digital journey, you could argue, really began way back with the nationalization of commercial banks. First in 1969, then again in 1980.
Right, I remember reading about that.
Yeah, this move brought a staggering something like 91% of the country's banking business under government control.
Wow, 91%.
Exactly. And what that did, crucially, was create a standardized, government-controlled banking network. Essentially, it was a prerequisite for building any later public digital infrastructure, like the National Payments Corporation of India, NPCI, and eventually UPI itself. Building on that centralized network, India then systematically constructed electronic fund transfer systems. You can almost think of it like laying down digital railway tracks.
Huh?
First, we had NEFT, the National Electronic Funds Transfer. Think of NEFT like a scheduled postal service for money. Payments are collected and processed together in batches at set times. Perfect for non-urgent, 247 transfers with no limits.
Batch processing, got it.
Then came RTGS, real-time gross settlement. This is more like a dedicated express courier. For high-value sums, it's immediate one-on-one delivery for transactions typically above 2 lakh.
And the Reserve Bank of India, the RBI, they manage both of those.
That's right. RBI manages an EFT and RTGS.
So those are the big sort of traditional wires. But then for every day, smaller payments, what filled that gap? That seems like a key piece.
Exactly. Bridging that gap was IMPS, the Immediate Payment Service, and that one's operated by NPCI.
Ah, NPCI.
Yes. IMPS offered instant 247 transfers up to 5 lakh. So this methodical, layered approach was, pretty genius. It meant India wasn't just throwing new tech at the wall. It was building a robust digital backbone, solving specific problems step by step, gradually preparing the ground for what was to come.
That systematic build-out was clearly crucial. It makes sense. But then the real momentum gathered as mobile phones became ubiquitous, right? It feels like it was during this wallet era that digital payments truly began to cultivate a user base, really setting the stage for the bigger transformations.
Absolutely. The early 2000s saw internet banking starting up. The mobile wallet era, that was truly transformative. You had companies like Paytm, Mobikwik, FreeCharge emerging.
Yeah, I remember those names popping up.
Their genius was in addressing what we call friction points in traditional online banking. Things like, cumbersome manual transfers, complex two-factor authentication. These wallets offered a kind of pocket-sized purse for seamless, small-value payments.
They made it easy.
Exactly, and that effectively cultivated a massive user base, already accustomed to the convenience of digital transactions. People were, they were ready for the next step.
So, pulling these threads together, it sounds like India meticulously laid the groundwork, piece by piece, before the Big Bang. This wasn't just a sudden tech leap, but a very strategic, government-backed initiative. What's the biggest takeaway from this initial phase for you?
I think the biggest takeaway is that India deliberately established its digital financial infrastructure as a public good. It was built on a centralized banking system, layered with these purpose-built electronic transfer systems, and then further primed by the widespread adoption of mobile wallets. This methodical approach, combining state policy with that nascent private innovation, made the subsequent revolution not just possible, but, almost inevitable.
Okay. Now, with all that groundwork laid, We come to what many see as the true game changer, the catalyst that really ignited this revolution. The Unified Payments Interface, or UPI. This is the engine everyone talks about, isn't it? What exactly is it, and what makes it so uniquely powerful?
UPI is truly remarkable, yeah. And it's a testament to that public good philosophy we talked about. It was developed by NPCI, remember, that not-for-profit umbrella organization, and designed specifically as an open-source, interoperable public digital infrastructure.
Open source and interoperable. Key points.
Very key. Its power lies in its elegant simplicity. Users link multiple bank accounts to a single mobile app using something called a virtual payment address, or VPA.
VPA.
This allows for instant interbank peer-to-peer and person-to-merchant transactions 24/7 without needing to know or share traditional bank account details like account numbers or IFSC codes.
So it's like a universal remote for all your bank accounts, basically, accessible through your phone.
That's a great analogy, yeah.
And the growth figures I've seen associated with UPI are just staggering.
Absolutely staggering. Since its launch back in 2016, real-time transactions have averaged something like 160% annual growth. It's phenomenal.
160%.
Yeah. As of, say, July 2025, UPI processed over 18 billion transactions per month. That solidifies its position as the world's largest retail fast payment system by volume. It now accounts for more than 75% of India's total retail digital payments.
75%. That's dominance.
It is. But it's not just UPI. The whole digital ecosystem is thriving. Other systems like IMPS, which we mentioned, processed 441 million transactions back in December 2024, and NetEC FASTag, the electronic toll collection system, nearly 382 million transactions that same month.
Wow.
So this isn't just one product success. It's a broad digital transformation happening across the entire economy.
That growth is extraordinary, but this kind of rapid expansion, especially for something positioned as a public good, often comes with its own set of challenges, doesn't it? I'm thinking specifically about what some people call the double-edged sword of the zero MDR policy. Can you unpack that for us?
Indeed, the zero merchant discount rate, or zero MDR policy, is a critical and pretty complex issue. Since 2019, basically no fees have been charged to merchants for accepting payments via UPI and also RuPay debit cards.
No fees at all for the merchant.
Correct. This policy was incredibly successful in removing that primary cost barrier for merchants, everyone from tiny street vendors to large businesses, and it has been absolutely instrumental in driving that rapid adoption we just discussed.
So on one hand, it's brilliant for adoption, right? Removes friction, gets everyone on board. But what's the downside? What's the other edge of the sword?
Here's the paradox. Well, the government declared UPI a digital public good and made sure citizens aren't burdened with fees. It also stated that the costs for the service providers, well, they have to be met through other means.
So someone still has to pay for the infrastructure, the service.
Exactly. This means the industry, we're talking banks, payment aggregators, those third-party application providers or TPAPs, they estimate an annual loss of approximately 8,000 crore. That's around $1 billion US.
$1 billion loss annually.
That's the estimate, yes. Government compensation covers only a fraction of that. So the real insight here is this delicate balance. You get explosive adoption, fantastic for inclusion, but potentially at the cost of stifled innovation and maybe even service quality from the very players who drive the front-end user experience.
Because there's less financial incentive for them to invest.
Precisely. Less incentive for improving service quality, investing heavily in fraud prevention, or working intensely on reducing transaction failure rates, for example. It creates this fascinating policy dilemma for India. How do you sustain a public good without, suffocating the private enterprise and the incentives needed for continuous improvement?
That's a profound tension.
Yeah.
Experts must have ideas on how to navigate this, how to find that balance.
They do. Many propose something like a tiered MDR model.
Tiered? How would that work?
Well, the idea is that perhaps large value payments could incur a nominal fee, something very small, while small ticket transactions, say below a certain threshold, remain completely free.
Okay, so everyday coffee purchases are free, but maybe larger business transactions have a tiny fee.
Something like that, yes. The thinking is this could ensure long-term sustainability and continued innovation without burdening the average person for their daily use. It could allow the ecosystem to thrive on both its public utility and private ingenuity.
Interesting. Okay, so with UPI being this open source protocol, what does the front-end ecosystem actually look like? Who are the major players that users like you and me interact with on a daily basis?
That's a great question, and it points to something the RBI itself has flagged. They call it a nested concentration risk.
Nested concentration risk. Sounds serious.
It means that while the underlying UPI infrastructure is open and widely accessible, the user-facing apps, these third-party application providers, or TPAPs, are heavily concentrated among just a few dominant players.
Who are the big ones?
Well, Paytm leads the pack with about 40% market share. They offer a really comprehensive suite wallets, UPI, e-commerce, other financial services. Then you have Google Pay with roughly 35%. They obviously leverage Android's ubiquity and have a famously user-friendly interface.
Right. Comes pre-installed on many phones.
Exactly. And then there's PhonePe, which is owned by Walmart. They hold about 15% and focus on comprehensive P2P and merchant solutions. You also have smaller players like Amazon Pay and MobiKwik, each with around 5%.
So this concentration poses a risk because if one or two of these dominant apps falter or have an outage,
It could disproportionately impact the entire ecosystem.
right, it sounds like a potential structural vulnerability.
Precisely. It could potentially limit future innovation and competition, too. And like you said, if a major player experiences significant technical issues, the ripple effect could be massive across the user base. It's definitely a key area the RBI is watching very closely.
It's not just about the apps, though, is it? There are some really clever physical innovations happening, too. You mentioned street vendors earlier, like the Soundbox device you see everywhere now. That always fascinated me.
Absolutely. The Paytm Soundbox is a fantastic example of what you might call hardware-based merchant digitization. It's a small, usually wireless payment terminal.
The little speaker box.
That's the one. It provides instant audio confirmation of a successful payment in the local language, payment received.
Ah, so it solves the trust issue immediately.
Exactly. It elegantly solves a crucial last-mile problem for, say, street vendors or small shopkeepers. It directly addresses trust and potential fraud concerns by providing that immediate audible signal. It bridges the digital transaction to a tangible confirmation right there on the spot. And Google Pay has a similar offering called SoundPod. These devices truly demonstrate how Indian fintechs really understand the practical challenges on the ground. They're building physical products on top of the digital infrastructure to drive adoption, especially in an environment that, not long ago, was almost entirely dominated by cash.
And it's not just consumer-facing stuff. Payment gateways, the back-end systems for businesses, they've also evolved beyond just processing transactions, becoming what we might call full-stack solutions.
Precisely. While players like Paytm, Google Pay, and PhonePe dominate the consumer app space, you have companies like Razorpay and KU building the complex back-office infrastructure for businesses, particularly online ones.
What makes them full-stack?
Well, take Razorpay, for instance. They offer a whole suite of products, developer-friendly APIs, tools for subscription billing, support for international payments. They've even innovated with India's first AI-powered self-healing POS devices. Yeah, the idea is they can proactively detect and resolve common issues themselves, ensuring the device stays up and running for offline merchants, minimizing downtime.
Well, it's pretty advanced.
It is. Then you have PayU, another major player, very dominant in e-commerce, and they recently received official RBI approval as an online payment aggregator.
Yeah.
And BillDesk, one of the oldest players in the space, tends to focus more on large enterprises and recurring bill payments.
Okay, so connecting these dots now, thinking about the whole ecosystem, how has this digital revolution, spearheaded by UPI, impacted the more traditional payment methods?
Yeah.
Particularly something like debit cards, which were once, pretty much ubiquitous.
That's a really fascinating consequence. What we're seeing is a direct impact, particularly on debit card usage for payments. In the fiscal year 2022-23, for example, credit card transaction volumes actually increased by 30%.
Okay, credit cards up.
But debit card volumes, the number of times people use them to pay for things, actually declined by 13%.
Declined. Wow.
Yeah, the IMF has also noted this significant trend. And there's a pretty clear causal effect here. UPI's zero-cost nature and its seamless, instant user experience directly cannibalize the traditional use cases for debit cards, especially for smaller, everyday purchases.
Because why use your debit card when UPI is free and just as easy, if not easier?
Exactly. And this poses a potentially significant long-term challenge for banks, many of which have historically relied on the transaction fees from debit card usage, the interchange fees, as a steady revenue stream. It's a classic example of disruptive innovation reshaping the landscape.
While digital payments have clearly dramatically expanded access for many, It's also clear that significant barriers to full financial inclusion still remain. These aren't just about price, are they? It's more complex than that.
No, not at all. Price is only one piece of the puzzle. Beyond cost, there are substantial non-price barriers that are often overlooked but are incredibly important.
Like what?
Well, things like deep-seated social exclusion in some communities, varying levels of literacy, both general and digital literacy. There's also sometimes a lack of trust in digital platforms, especially among older populations or those less familiar with technology.
Okay.
And then there are the inherent challenges many low-income individuals face with producing the necessary KYC Know Your Customer documents required for formal banking. Getting the right paperwork can be a real hurdle.
Right. And physical access, too.
Absolutely. Physical access to bank branches remains a significant issue in many rural communities. For someone working for daily wages, taking a day off just to travel to a branch for a simple transaction means losing vital income. So just providing a bank account number is only the very first step. You need holistic solutions that build trust and ensure genuine usability, not just theoretical access.
So given those complex, very real challenges, how has the Indian payment ecosystem specifically innovated to tackle these issues for the unbanked and the underbanked? What are the targeted solutions?
This is where India's strategic, layered approach to solutions truly shines, I think. They haven't just relied on one silver bullet. Take the Aadhaar-enabled payment system, or APS.
Well, I thought that's the National Biometric ID System, right?
Exactly. APS allows Aadhaar cardholders to perform basic banking services, withdrawals, deposits, balance inquiries, fund transfers at micro-ATMs, or designated agent locations using only their unique Aadhaar number and their biometric authentication, like a fingerprint or iris scan.
So no card needed, no PI needed.
Correct. It directly addresses both the KYC document challenge, because Aadhaar is widely held, and the physical access barrier by bringing basic banking services closer to communities via these micro-ATMs and agents. It essentially makes your identity, your bank card, and PI combined.
That's incredibly clever, truly bridging the last mile.
It is. Then there's UPI Lite. This is designed for small value transactions, say up to 1,000 or maybe a bit more now. It enables instant payments without needing a PIN for each transaction.
Like a contactless card tap, but through UPI.
Sort of, yeah. It also processes these small transactions on device to some extent, which reduces the burden on the core banking systems during peak hours. And it simplifies bank statements, as multiple small light transactions might be batched together. It just removes another layer of friction for those frequent tiny payments.
Okay, that makes sense for simplifying things, but here's where it truly blows my mind. UPI 123PAY. This sounds like an absolute game changer for India's massive population of feature phone users, people without smartphones or reliable internet. How does it possibly work without an internet connection?
It absolutely is a game changer. You're right, India has an estimated 290 million feature phone users. UPI 123PA is designed specifically for them, allowing digital payments without needing an active internet connection on the phone itself.
That sounds like magic.
It leverages 4 ingenious methods. First, there are IVR calls, interactive voice response. You basically make a secure call and follow voice prompts to initiate a payment.
Okay, voice-based.
Second, missed call-based payments. A user gives a missed call to a specific number, which then triggers a callback asking them to authenticate and complete the payment.
A missed call triggers a payment. Wow.
Third, some manufacturers are embedding payment functionality directly into the feature phone's software OEM embedded apps. And fourth, there's even proximity sound-based technology, where the phone emits unique sound waves to transmit payment data to a compatible device nearby.
Using sound waves. Incredible.
These innovations demonstrate a really profound understanding of the actual grassroots challenges. It's a commitment to creating a scalable, socially equitable, and truly inclusive ecosystem that genuinely tries to leave no one behind, regardless of the type of phone they have or their internet access.
India clearly isn't stopping at domestic success, though. It seems like it's actively pursuing the internationalization of its payment model. What does that look like for UPI and its domestic card network, RuPay?
Yeah, India's ambition is definitely global now. They want to position their digital public infrastructure as a potential blueprint for other countries. RuPay, India's domestic card network, is now actively marketed as a global card payment network, aiming to compete directly with giants like Visa and MasterCard.
A homegrown competitor on the world stage.
Exactly. And a key strategic move by the RBI was allowing RuPay credit cards to be linked to UPI. That's a feature not currently available for international card networks like Visa or MasterCard within India. This significantly boosts RuPay's domestic utility and gives it a unique selling point right at home.
And we're seeing this global push translating into actual agreements, right?
Yeah.
UPI going international.
Yes, definitely. It's happening primarily through bilateral agreements between India and other countries. UPI is already accepted, at least in some capacity, in places across Asia and Europe. Think Bhutan, France, Mauritius, Nepal, Singapore, Sri Lanka, and the UAE.
France and Singapore, those are significant.
They are. And perhaps even more significantly, PayPal recently announced a partnership with NPCI International to integrate UPI onto its global platform, PayPal World. The aim there is to facilitate seamless cross-border payments, eventually connecting potentially billions of users. That's a massive endorsement of the system's underlying potential.
But this raises an important question.
Mhm.
While the ambition is clearly there and the technology is impressive, what are the inherent hurdles for UPI's global expansion? It sounds like a fantastic concept, but I imagine it's not without its challenges beyond just signing agreements.
Absolutely. The global expansion faces significant hurdles, you're right. A major one is simply the lack of widespread merchant acceptance in partner countries. Just because an agreement exists doesn't mean every shopkeeper is ready or willing to accept UPI instantly.
Right, building that network takes time.
It does. Also, Indian travelers often still prefer using credit cards when abroad. Why? Well, partly due to habit, but also because credit cards offer established security features and, crucially, chargeback protection mechanisms, which UPI in its current cross-border form doesn't offer in the same robust way.
Security and recourse are big factors for travelers.
Definitely. Plus, while UPI transactions are famously free within India, cross-border payments can sometimes incur hidden foreign exchange conversion fees or markups imposed by the banks involved. This adds a layer of complexity and potential cost for users who might be expecting a completely free experience like they have at home.
So the current approach of these country-by-country bilateral agreements,
It sounds slow.
it is. Some experts have described this strategy of expanding through bilateral deals as inherently slow and inefficient, and then there are broader systemic issues.
Like the overwhelming dominance of the US dollar in international trade and finance, navigating complex, differing regulatory environments in various nations. Data localization laws where data has to be stored can be a major sticking point. And even geopolitical tensions can complicate efforts to build these kinds of cross-border financial bridges. So currently, UPI's international use is often largely confined to specific tourist corridors or merchants catering to Indian travelers, rather than it being a truly ubiquitous, universally accepted global payment protocol yet.
Right, lots of hurdles still. Okay, looking ahead then, what's on the horizon for India's payment system domestically? What's the Reserve Bank of India's grand vision for the future? Where are they steering this ship?
The RBI is definitely looking ahead, and they're incredibly proactive. They have a strategic plan called Payments Vision 2025. It's anchored by 5 key pillars, which they call the 5 I's: integrity, inclusion, innovation, institutionalization, and internationalization. It is, and it includes something like 47 specific initiatives. The overall goal is ambitious: to more than triple the number of digital payment transactions by 2025 compared to the baseline. It's a comprehensive blueprint for the next phase.
Triple the volume.
Okay.
Okay. What are some of the most exciting or potentially impactful initiatives coming down the pipeline from this vision?
Well, one area is exploring frameworks for what they call new umbrella entities, or NUEs.
NUEs.
The idea here is to potentially allow new players, maybe private consortiums, to set up alternative retail payment systems that could potentially compete with NPCI's dominance. It's partly aimed at diversifying the sector and reducing that nested concentration risk among the big TPAP apps we discussed earlier.
Introducing more competition at the infrastructure level.
Potentially, yes. Another huge area is credit on UPI. The RBI is now allowing banks to offer pre-sanctioned credit lines directly through the UPI interface.
So you could pay using borrowed money directly via your UPI app.
Exactly. This is projected to unlock massive growth in digital lending. Some estimates suggest the market could exceed $500 billion by 2030. It could fundamentally change how small businesses and individuals access credit.
That's a massive number.
What else?
CBDC?
Yes, India is actively piloting a central bank digital currency, or CBDC, both a retail version for consumers and a wholesale version for interbank transactions. The potential benefits are seen as reducing transaction costs, increasing efficiency, and perhaps speeding up cross-border payments significantly by involving fewer intermediaries compared to the current correspondent banking system.
The digital rupee, essentially.
Essentially, yes.
And there's also talk of INR-backed stablecoins. What are those, and what could they mean for something like international money transfers?
Right. INR-backed stablecoins would be privately issued digital currencies, but their value would be pegged directly to the Indian rupee, typically backed by reserves. Some industry leaders see these as a potential game changer, particularly for international remittances.
Yes.
By leveraging blockchain technology, they believe these stablecoins could significantly reduce the costs and delays associated with traditional international bank transfers. We're talking about potentially moving from fees of 4–6% and settlement times of days, maybe even up to 60 days in some quarters, down to fractions of a percent in fees and near instantaneous settlement. That would be truly transformative for millions sending money home.
Wow, near instant and almost free. That would be a revolution.
Absolutely. And even simpler innovations are happening, like enabling cardless cash withdrawals at ATMs using just a UPI QR code on your phone screen. So the RBI is clearly thinking several steps ahead, trying to proactively mitigate emerging risks while simultaneously unlocking new economic opportunities across the board.
What an incredible deep dive this has been into India's digital payment revolution. It's just so clear that this success wasn't accident, was it? It's really the result of a truly visionary public-private model, these strategically layered technologies, and fundamentally a profound understanding of those grassroots challenges we talked about.
Indeed. We've definitely explored some key tensions. Domestically, there's that challenge of sustainably funding the public good aspect of UPI, particularly with the zero MDR policy in place. And internationally, the nascent expansion faces significant hurdles that go well beyond just the technology itself.
Right.
But the uniqueness of India's model truly stands out. It demonstrates this powerful combination of, top-down policy vision driving things forward, combined with incredibly agile, bottom-up, user-centric innovation that addresses the specific needs of its incredibly diverse population. It's a really compelling case study in digital transformation.
It really is. So for you, our listener, as we wrap up, here's a provocative thought to perhaps mull over. Consider how India's public good approach to building digital financial infrastructure fundamentally challenges the traditional, often purely market-driven models of financial innovation we see elsewhere. What could this unique Indian approach mean for other developing economies that are seeking rapid financial inclusion and widespread digital transformation, often on a massive scale? Is this model uniquely Indian, born from its specific circumstances, or can its fundamental principles, the public infrastructure layer, the focus on inclusion, the layered approach, be replicated and adapted elsewhere to create similarly impactful change across the globe?